Amin is the managing director at Alembic Pharma and now joins in to answer those questions. Shaunak, thanks for taking time out. You had that EIR report in place for all of the facilities that are focused on the US generic market. Can we expect the US sales then in the second half to be better than what we saw in the first half? Or will it be a price or volume-led growth?
We don't usually give a forward guidance, but if I could, comment on the US market, it's largely we see a bottoming out in terms of price competition, and you could see sequentially we have seen some momentum on our growth numbers. I think from our planning point of view, we have approximately 10 new launches lined up in H2 of this financial year. And we hope some of those can give us some traction and build up some momentum on those sides. In terms of whether it'll be a price or a volume, at the moment, we're seeing predominantly a volume-led growth at this point in time. But we're hopeful that we can get some one-time opportunities to supply the market, and which should give us which should hopefully, can give us some amount of price-led growth also.
So then the question is, will the second half see similar growth rate as the first half, or will it be better?
Yeah, I can say that we are quite comfortable to say that.
You're planning new launches as well in injectable segment. What we understand is that the growth has been better in the US geography. What's leading to injectables grow, and how long do you think this outperformance bout is going to continue?
Yeah, so usually we don't give a product-led split of the growth numbers, but all I can say is from a portfolio level, like I said, we have 10 new launches lined up in H2. I wouldn't comment on the mix of the launches at this point in time, but I think we're hopeful that, with our newer plants, both in derm as well as injectables, we hope to see some additional traction coming from these two product lines, in addition to our oral solid dosage formulations of the past.
You added new division in the animal healthcare business as well. How much incremental growth can you expect in the top line from this division? And are the margins here better than your consolidated margins?
So I think the margins, so firstly, I think on the veterinary side, we have added one more division with 350 people in it. And we've seen a significant growth momentum. If you see this quarter's numbers, they are in fact representative of the additional manpower that has given us additional momentum. We expect this momentum to continue growing forward. And in terms of margins, I would say the veterinary margins are maybe just around our overall margins, maybe just a touch lower than what our overall margins are.
Sure, but talk to me about the US geography as a whole, because we have been getting this report about drug shortage, etc. How's it helping your company?
So at the moment, we haven't seen any impact of these shortages on our supplies at this point in time. But if it does come along, I think we're quite confident that we are in a position to capitalize if there is any one-off drugs or shortages in the products that we are supplying.
Okay, Shaunak, so not a big impact when we talk about the US business, but in DF, how did seasonality play its role? Was it at par with your expectations, and how are you seeing the full year, pan out as far as the domestic formulation business is concerned?
So on the India business piece, if you look at Q2 last financial year, I think there was a combination of, a post-COVID buildup of sales as well as some amount of post-COVID hangover in terms of the flu season, which we didn't see this year, partly due to an extended summer season. The growth for India business on the acute and the respiratory side was extremely subdued, not just for us, for the whole industry. But I feel this is a one-off, largely contributing to the past disturbances that COVID has caused us, which got exacerbated by an extended summer season. But I think going forward, we expect things to return back to normal, even for the acute as well as respiratory markets.
And your gross margins have expanded quite smartly by 110 basis points year on year to about 71% due to a superior product mix and lower raw material costs. Do you believe that this looks sustainable?
So on the margin side, I think as long as we see some top line growth, as long as we see in terms of product mix getting traction going forward. I think we usually don't comment on future earnings, but I think I could say we are at a comfortable point both for US as well as non-US as well as the India business in terms of maintaining this rate of growth.
Right. Great to then have you on the show. Thank you so much for taking the time out and speaking with us today. That's the highlight coming in from Alembic Pharma's numbers. But we